What is up, YouTube? What's up, guys? The Composer Trader here, and welcome back to another post-trading analysis video. I have been gone for a minute, and I apologize. I've just been extremely busy live streaming inside of the TCT trading community, but we're back this week with the post-trading analysis videos, and I have a lot of videos actually lined up, so I'll be releasing them throughout the week, recapping some trades that we took, wrapping up April, because April was an absolute amazing trading month for me personally. And today we've got a very interesting trade on the agenda because it is the swing long on SUI USDT that we were screaming publicly at the top of our lungs that it was going to be an amazing high probability entry. Right here on X, you can find an entire track record of me posting the setup publicly with 16,000 people viewing it, where I said I will be sizing up heavy on leverage longs if we get a slow pullback into 2.0289, 2.0289 is literally down here. So we were looking for longs literally down there. And we got exactly what we wanted. You can see an entire updated track record here on X with the entry, the target that was targeting a new all-time high, and then finally the first take profit getting taken as well. It's all here publicly. Even on the live stream that you can find on this channel, we were talking about this a lot. So we're going to dive deep into the technicals behind this trade and why I found this such a high probability model, and also how you could have managed this trade to perfection, which is something I could have personally also done better. Okay, so we're going to dive deep into the high probability factors, and that all starts with context building. Okay, so let's delete everything right here. So what we have right here is actually pretty funny because for some reason, we have been absolutely nailing the SUI chart because we nailed the all-time high right there, literally to the cent on the retest, like literally to the dollar, and also the long right there on the retest to the dollar. So it's pretty funny. SUI has been treating us very nice, and it's been a very amazing chart to analyze right here. But when I was mapping out this exhaustion and this distributive price behavior, I also told everyone that, hey, we can still get a 60% to 70% correction and still maintain our swing structure from the low up, making higher lows and potentially a higher high, right? And what we kind of see right here, if we map out the structure, is that you have your swing structure right here pointing up, making a higher low and a higher high, which is your 2-week structure. But you also have your weekly structure that's right here, making a higher low and an extra higher high right there. So right here, you can see this structure demand POI, and that is basically your demand POI where the two structures stay intact. And when you have your two high time frame swing structures staying intact, I used to call those zones decisional blocks and pivot zones, where you have multiple structure pools aligning, and if you want to maintain that bullish momentum, those are the best POIs for price to bounce from. And this is obviously high time frame structure demand, but on a lower time frame, you can dissect these levels into order blocks as well, where you can see that right there in the lowest section of this high time frame structure demand, you got a simple OBIF order block with the inefficiency, and that is actually where price ended up bouncing from, giving us that rotation towards the upside. Okay, now, so I knew when price was coming in here that swing structure could still stay intact, which it ended up doing so far. Okay, and what was really standing out to me was the way price was approaching our support level right there, because the same way we were calling for a short at the highs, price was right here making higher lows and higher highs, but they were decreasing in size. And every time you take the high, you're sweeping the liquidity above that high, and you were leaving the lows intact. So we were sweeping liquidity and liquidity and liquidity right there at the highs, building up all these lows. And that was one of the main reasons from a liquidity standpoint why I was expecting a rotation back down, because you're sweeping buy side liquidity, leaving sell side liquidity intact. Markets love to move from liquidity to liquidity, so I was expecting a high time frame rotation back down that got confirmed by the 1, the 2, and the 3. And the reason why I'm pointing this out is because we're going to apply the exact same arguments, but now the other way around. Because the moment we got this aggressive sell-off right there, that's when you started sweeping all that sell-side liquidity. So right here, we were sweeping sell-side liquidity, and you can see that immediate buyback on that daily candle, right? We went lower, and you bought back immediately 60%. And it's always the coins that have very aggressive buybacks after deeper market corrections that end up having the proper accumulation models. But right here, we finally started sweeping sell-side liquidity, leaving some highs intact. And that kind of continued going into the model. So we were sweeping sell-side liquidity right there, sweeping some more sell-side liquidity right here, sweeping some more liquidity right there, and then sweeping that last bit of liquidity right here. So you can see right now that the opposite is happening, right? We're sweeping now sell-side liquidity over and over and over again, while leaving that buy-side liquidity now intact from this point straight into the high. So you can see that lots of highs right here are stacking up, and all the lows are getting taken, while coming into that extreme demand POI, which was truly the last demand remaining, protecting price from taking that market structure low on the weekly time frame, maintaining that weekly pivot pool with the 2-week and the weekly structure pools. So the way that we were approaching that POI and the way that we were setting ourselves up and the price behavior prior to going into the range I'm about to lay out here, that was already giving me signals of exhaustion towards the lows, where they're using all that sell-side liquidity to fill their buy orders for a potential reversal of price. Okay, so you can see that this market is just a liquidity game. Right here, we were taking the highs, leaving the lows intact, and right here, we're taking the lows, leaving the highs intact. So it just showcases the rotation in liquidity and potential rotation of where the market is going to next based off the liquidity. So keeping the charts clean right here, I identified that price came into that most extreme demand POI, potentially maintaining that high time frame pool. So I was looking for a potential higher low, also with the confluence of Bitcoin potentially creating some sort of an accumulation for the high time frame reversal back up. We were in this range, and obviously we are downtrending right here, making lower highs and lower lows. And when you're downtrending, you pull your range from bottom to top right there. So I had this range on my chart, and then you can immediately see that we had the initial range low, we had the initial range high, and then we had that deviation 1. Okay, now from here, we're going to be discussing some details, and you need to pay close attention because I use these all the time, okay? And they're very tiny rules that are very important. So, I had my tab 1, I had my tab 2, and price came back inside the range itself, okay? And you can see right there that at the second tab right there in that pivot point, we left behind 6-hour demand in the shape of an order block, OBIF, because the order block gets validated with the fair value gap right here. I like to call them order blocks with inefficiencies. Okay, so right there, the order block gets validated, and then price comes back immediately and then pulls back straight into that 6-hour demand. And obviously, technically speaking, this is your extreme demand. So could this already be a 1, a 2, and a 3? And the answer is technically yes, but the only way that you can trade a high time frame model where your second and your third tab are so close together, especially relative to tab 1 and tab 2, it can only get validated if you have an amazing, super high quality return to zone from that market structure high that you're waiting for it to break to confirm the model straight towards that range high right there. If that return to zone is not super high quality, you cannot take the trade, because the reason why you can take it when the return to zone is very high quality is because you're expecting an expansion back up, and because there is barely any resistance, well, what is there going to make price reject for a higher time frame third tap or a better looking third tap? Well, if the return zone is very high quality, then there shouldn't really be something that's going to make price reject. Okay. But at the same time, and I can already tell you guys this from experience, is that I have a unique little extra strategy, if that's what you want to call it, or just, pattern recognition, where your TCT models can be extra high probability if you have a lower time frame. Now, listen closely. It's not low time frame, it's lower time frame extended accumulation that is a higher time frame normal accumulation. So, what do I mean with that? Right here, you have your tab 1, you have your tab 2, you have your tab 3. Now, the return to zone is pretty good, right? The return to zone is pretty decent, but I wouldn't say it's like that high quality that you can validate a market structure confirmation with a third tab entry between this high down towards that low. The market structure itself was also pretty sketchy, right? If you want to confirm the model, you take the highest point between tab 2 and tab 3 down towards that third tab low, you follow that structure pool, and then right here, you kind of have an SFP, and then you still have the higher low for the higher high, and then you have the break, which was a very aggressive break. Also, I think the tariff news got released there, causing the aggressive expansion, confirming the model. It was definitely a tougher entry, and I also personally did not enter in this price action right here. But I identified this aggressive expansion, and because we expanded so aggressively, we left behind this structure demand right here. And now it becomes very interesting to what I was saying earlier. It is very high probability if on a lower time frame you have an extended accumulation that is a higher time frame normal accumulation. Now, what do I mean with that? If price on this 6-hour time frame ends up pulling back into that 6-hour order block, which is also that structure demand on the lower time frame, you could have your 1, you could have your 2, and you could have your 3, and then this would simply be the fourth tap. In Wyckoff terms, that will be called an LPS, okay? And you can trade the fourth tap. Even if you just have a normal fourth tap of a Wyckoff Model 2 accumulation, if you find your extreme demand, or again, extreme liquidity, you can trade the fourth tap the same way you can trade a third tap. But only the fourth. A fifth, then it just becomes too overextended because it just showcases a lack in expansion in your desired direction. But you can trade the fourth tap. It's called an LPS in Wyckoff terms. You can search up the normal Wyckoff models. It's called an LPS. In the case of an accumulation, in case of a distribution, it's called LPSY. Probably, if I'm not mistaken. Yeah. Now, it's extremely high probability if your lower time frame model is an extended accumulation model and this fourth tab makes it extended, but on a higher time frame, it's a normal accumulation model. And what do I mean with that is that, well, the range here is not only valid on the 6-hour. No. The range is valid on the daily time frame even. But on the daily time frame, that third tap completely disappears because you cannot draw structure within the tap, right? Right here on the daily time frame, it's just one deviation and one expansion back up. And this could simply be the third tap right here and not the fourth tap. So then, circling back to what I just said, it's an extremely high probability model if you have a lower time frame 4-tap model, which is a high time frame normal model, which is what we're seeing here. On the high time frame, you have a normal 1, 2, and 3, and this is the extreme demand, which on the lower time frame is an extended model with a 1, 2, 3, and 4. Boom. Perfect. Absolutely perfection. And therefore, if you have to map out the high time frame third tap POIs, because this on the high time frame merges into one tap, this would be your extreme liquidity. And that right below would be your extreme demand. Now, the reason why this will be the extreme liquidity and not this, because technically speaking, this is the first higher low and therefore your extreme liquidity, is because this tap is already part of the Wyckoff model. This is already a lower time frame 1, 2, and 3, right? So if you're trading that high probability model with the 1, 2, 3, and 4 on the lower time frame and the 1, 2, 3 on the higher time frame, this obviously should not get taken out because that ruins the entire idea, right? So when you have such a high probability demand POI, which is very clean looking structure demand, and you have that liquidity right here building up right above it, that second higher low is actually your extreme liquidity and not the first, because the first is already part of the Wyckoff model. Okay, so the moment you expand it up right there, the only thing that price needed to do was simply have a normal retracement into this POI. Like have a normal retracement into the POI with a normal breaker structure back to bullish, and then we're going swing long. Okay, then we're going swing long. And you can see right here when we're zooming in, price is literally making a normal retracement. Like what you don't want to see is just like an aggressive reversal like this. If you have an aggressive reversal with, a massive sell-off, that's not what you want to see. You want to see some highs getting built up here, coming down slowly. And this obviously took its time coming down, which was amazing. So I have my alert there. And like I said on my X as well, right here, a bullish breaker structure is going to be a long. Like that was the setup. We identified the context. And then right here, the moment you left behind that structure demand, I said price does not have to come back here because you already have a 1, 2, and a 3. But if it does, I will size up heavy after a mitigation of 2.0289 with a bullish breaker structure. So all that's left to do for us is simply check right here after we mitigate that demand. Okay, what is the structure from top to bottom? Now I can ignore all these pools right there because it matters only what the last lower high for the lower low was. So right here you can see on the 1 hour, you have that lower high for the lower low, right? 2 candles going up right there, 2 candles going down. This being your market structure high. And then we simply had to wait for a bullish breaker structure, okay? Now, I was personally out for dinner when this breaker structure presented itself, but I was aware of it. But what you're seeing right here is a bullish break. And I can already tell you guys right now, when you have a bullish break on a high time frame like the 1 hour on a range that is like 40 plus days in duration, because this is a massive range right here, guys. When that presents itself, you can see right there with the breaker structure, 37 days in duration, and you have an aggressive breaker structure right here, leaving behind structure demand, backing up your stop loss. Like you do not have to worry that price is going to go vertically up and never get a retest. Like on a high time frame model like this, you are going to be getting a retest. So right there, I entered on that retest after the demand mitigation, keeping my stop loss above that third tab low and targeting a new high right here, which is the technical target. But I knew that based on swing structure, this could be a macro higher low for the higher high. So our swing structure, like I just said, was still pointing up here. So if I measure the structure from top to bottom, and that breaks back to bullish, I'm skipping over a few points here, so don't make it that accurate. I'm just looking at the range high as the most recent pool. But if I can break the structure from top to bottom, when the structure from bottom to top is pointing up, well, that's simply our level 1 pointing up and our level 2 pointing down, also breaking back to bullish. So this break of structure right here can confirm the rotation back up towards an all-time high following normal market structure pools, applying the domino effect, right? Where right here, if you break the structure from the low up, if you follow the structure from the low up and then the structure from the top down breaks back to bullish, you can continue with that red market structure pool right here. Simply level 1 and level 2 market structure combinations explained in lecture 1 of the TCT mentorship. So I was simply, given the size and the aggressiveness of the expansion, I was just letting the markets decide of like, hey, I'm going to keep it open. I'm going to trill my stop loss when I can and let the markets decide, when I'm going to be taking profits. And I ended up taking profits today for around 30%. Realizing already 5%, still having 10+% unrealized, which is absolutely insane. And I'm still targeting a new all-time high until the market proves and tells me otherwise. But now we're diving into the trade management section of this trade. So personally, when I entered this trade, I was pretty confident in the high time frame model. I would say very confident in the high time frame model. There were some doubts because Bitcoin at the time had a potential of going lower before going higher, which would probably invalidate this model. But still, it was worth taking it because we're simply trading these charts individually, sticking to our system, and then if we get stopped out, we get stopped out, and we probably have to take the L before getting the W. But because I was already in this position, I wasn't really paying that much attention to the trade. I was kind of setting and forgetting, where if I paid closer attention, I would have gotten an even more refined entry for a better RR, because this was the original trade, and that's also the trade that I'm still in, this position right here, okay? But if I'm gonna hide the setup tool real quick, you can see that right after this bullish breaker structure, we went straight into a new range right here, which was actually a high probability model 2 distribution, okay? Where you have the initial range high, half the initial range low, half that deviation 1, and then right here, you grab that extreme liquidity, which is the first lower high that is created after putting in your second tap. Right there, you can see second tap, lower high, lower low. You grab that extreme liquidity, and then you measure what is the lowest point between tap 2 and tap 3. This is being 1, that being 2, that being 3. This is the lowest point. You measure the structure from the low to the high towards that third tap, and if that breaks back to bearish, that will simply confirm your model 1 distribution. So right here, get that breaker structure back to bearish. Okay, enter on the break, get the retracement into supply right there, which is the extreme supply right in that pivot point, and then price ends up rotating back down. And this is a very high probability model 2 distribution schematic, which is obviously against your long right here. But this is a pattern in price that I've been seeing more and more, and I actually kind of started to notice because of journaling, because I oftentimes journal that, like, hey, I'm entering on the trade, I'm immediately getting a distribution, and that would kind of cause some sort of, me being cautious for the potential long, because I'm like, hey, I'm immediately getting a distribution against my entry, which is an accumulation, right? But I can already tell you guys right now, based on my experience, that, and you really got to note this down, if you have a bullish breaker structure right here, okay, and you have extreme demand lower in that structure demand section, and it's a high probability breaker structure that you're entering on with a high probability model, and you get that high probability distribution right here, right after your bullish break, it's so typical for price to do something like this, and it's actually more bullish than bearish if you're trading a higher probability accumulation, because you have this distribution, and the purpose of the distribution is to mitigate demand for the continuation back up. So you get your bullish break, you will get your distribution model, you will get your rotation to extreme demand, break it back to bullish, and then get the reversal back up. It happens so often, guys, that right now it doesn't faze me at all anymore. But this is such a common thing, and obviously it works in the exact opposite way when you're trading a distribution. So if this is the third type of a distribution, it's very normal to get the accumulation, to mitigate the extreme supply, to then get the continuation towards the downside. And that is exactly what happened right here. And you can get very refined entries in this point right here, because if you get any low time frame accumulation models or any low time frame breaker structures back to bullish, you are mitigating extreme demand. So there's no reason to go lower after that break, and you can get very low time frame breaker structure entries for potential macro targets. Okay, so translating that into the chart right here, you can see that you got that distribution model, but we didn't just bounce from extreme demand. Right there in the lower section, in that pivot point, you have this unmitigated 45-minute demand POI. And you can see that you get the distribution model, and the purpose of the distribution is to sweep all that sell-side liquidity, mitigate that last final bit of demand, truly the ultimate opportunity for the market makers to fill those last positions before the reversal back up. So then, when price is mitigating that demand, you can look for potential breaker structures back to bullish, and you can see that you created a new range in here. So you're following your structure down right here, making lower highs and lower lows, right there, and then you have your new range creation, and you can actually see right here that you have your tab 1, you have your tab 2, price comes into this 5-minute demand POI, and then you have your tab 3 right there. And then you can go on like a 2 to 3 minute time frame, simply checking what the market has to offer you, and you can enter on a low time frame breakout structure right there, back to bullish. After mitigating your extreme demand, you can see even come for that most refined 2-minute demand POI right there. For the third tap, get the breakout structure back to bullish. And guys, I am not kidding when I tell you this can be your low time frame Model 2 accumulation schematic entry for literally a technical target of a new range high. And I'm not even kidding when I say this. This is all following the rules right here. A low time frame entry for literally a high time frame target well over 100 RR, which is absolutely crazy. Absolutely crazy. And when you have an accumulation, instead of just only a breakout structure, you can even notice that it's a distribution that turns into the range that then turns into a PO3, which you'll oftentimes see also in normal everyday price action. If you're in an uptrend, you sometimes get a higher low for the higher high, where the higher low is caused by a distribution that turns into the range, manipulation and the expansion play back up right here. So the ultimate way to trade this is to have a swing position, right? Entering on the breakout structure or on the high time frame retest. Keep the stop loss above that swing high time frame third tab low. Enter scalp short right here on the Model 2 distribution, and then risk some profits off the short back into the long of the low time frame accumulation and run it back up. And then from here, you had that first breakout structure right there, and then you kind of had the distribution, and then you got that second proper breakout structure right there. Let's clean this up a bit. Right, let's clean this up. You got the second breakout structure right there, and then on that pump, you again left behind extreme demand, extremely good looking. And if you truly missed everything, you even got a re-entry opportunity right there, because right now you're simply following structure, making higher lows and higher highs. So boom, higher low, higher high, got a good looking second breakout structure right there. And you can literally, if you want, you can set limit orders. And people keep on texting me right now, not that convenient, but you can simply set limit orders below this low, because that's your new extreme demand, your new market structure low, and also still target the high for, well over 12%, which is absolutely an amazing trade. And you can still be in that trade with me right now, which would be well over 25 plus, so it's an absolute insane trade. But personally, I wasn't really paying that much attention. So this happened over the weekend. So you can see this short got confirmed at 6:30, around 6 to 7 in the morning on a Sunday. And then the long got confirmed around 9 p.m. on the Sunday, which was again in the weekend, which is a bit unfortunate. And I wasn't really paying that much attention to it because I was already in the long. But I should have definitely paid more attention to it because it was very, very, very significant. I was more setting and forgetting, but man, that was absolutely insane, and it met all the requirements. And I generally don't know another system out there that can deliver literally in a technical valid way 100 RR entries. Now they barely happen, but sometimes they do. Sometimes you have a lucky day, right? But you have to show up every day to get that lucky day. And that was just, ultimate price behavior. Getting that bullish breakout structure and then getting a distribution where the purpose of that distribution is to mitigate demand to then get that reversal back up. I'm telling you, it is mind blowing. Okay, it's absolutely mind blowing. It's so accurate. It is genuinely insane. So I'm still in that long. I'm targeting new all-time highs as my max target. We're kind of stalling around in here. Bitcoin was already completing the higher time frame accumulation here. So I'm just seeing how far I can take it. I've taken 30%. I still have 70% open for a new all-time high. So I'll update it on my socials. But also, guys, this trade, the general entry on that 1 hour breakout structure, it was all shared in advance inside also the TCT trading community, where we take it live, everything shared live, updated live. I even this time, on this specific trade, it was also taken and pre-planned in the public streams for everyone to watch, just because it was such a high probability model. I really wanted everyone to benefit off of it. And I cannot make it more clear than to say I will size up heavy after a mitigation of 2.0289 with a bullish breaker structure. So if you want to put 2.0289 on the chart, you will get exactly this right here. So I will size up heavy right there. That's exactly what we got. Currently in an amazing position. Looking to take this to new all-time highs, and if that happens, I will be taking a vacation. But yeah, lots of valuable insights right here for you guys. Getting that low time frame extend accumulation in combination with the high time frame accumulation, and then that typical price behavior pattern with the breaker structure followed by the distribution for the extreme demand mitigation and continuation. It's such typical price behavior. So definitely note that down. Include that into your own trading as well. Maybe I've opened some eyes to something you were already doing but not really aware of. And I will see you guys all in the next one, which will be uploaded tomorrow because I have pre-planned some other videos already. Okay, I appreciate you guys, and I'll see you all in the next one.